is India's top trading partner? You must be thinking of an ally, a friendly neighbor, or a trusted Western partner. Well, think again. India's top trading partner is China. The bilateral exchange is around $118.4 billion, $118.4 billion. The United States is a close second. That trade is around $118.3 billion, so hardly any difference. And yet, China's #1 position is worrying because it reflects a larger strategic challenge for India. Also, this is not unprecedented. In 2021, China was India's top trading partner. Then the US took over. And now, after a gap of 2 years, China is back on top. Why is this bad news? I'll give you two reasons, political and financial. First, the political reason. China is India's strategic rival, arguably its biggest external threat. A country that is salami slicing Indian territory. Just think back to the 2020 Galwan clashes. India lost 20 soldiers in the violence. And since then, relations have hit pause. No high-level engagements, no political breakthroughs. Things have largely been frozen. Even today, disengagement has not been achieved. More than 20 rounds of military talks have been held, yet no breakthrough. China has around 60,000 soldiers facing the LAC, line of actual control, the de facto border at the moment. India, too, has a similar number. But that same China is our top trading partner. It's obviously counterproductive, which brings us to the second reason, the financial one. This trade is tagged heavily in China's favor. India's imports make up $101 billion and China's imports make up just $16 billion. So look at the trade deficit. It's almost $85 billion. Same with the trajectory. Let's look at the period from 2018 to 2023. India's exports to China barely moved. But China's exports to India surged more than 44%. As a result, the deficit has widened. It was $53 billion in 2018. It is $85 billion now. I know these numbers do not look good, but you must factor in some variables. Like, what is the overall trade situation? What does India buy from China and how does this help Beijing? The overall trade situation has improved. In 2022, India's trade deficit was around $121 billion. By 2023, it fell to $78 billion, which brings us to the second question. What does India buy from China? Simply put, very important things like electronic goods, your smartphones, laptops, telecom parts, machinery for factories, plastics, ingredients for the pharma sector, and EV batteries. Around 75% of India's battery imports are from China. It's a very dangerous dependence. And that brings us to our third question. How does China benefit from all of this? Imagine a conflict scenario. The fighting won't just be physical. It will also be financial. And that's where this trade imbalance could backfire. China could choke India's factories, maybe withhold strategic exports, and hamper India's capabilities. And to be clear, this is not a problem just for India. Most major economies in the world face the same issue. China is the top trading partner to 120 countries. 120 countries. You have Japan, South Korea, Taiwan, Vietnam, the Philippines, Australia. None of these countries are on good terms with China, especially not the Philippines. They're clashing almost every day. So what are these countries doing? Well, some of them are de-risking. Basically, expanding supply chains beyond China. Others are friend-shoring, taking businesses and factories away from China and then putting them on friendly shores like India or Vietnam. That is friend-shoring. But have these strategies worked? Well, in some cases, yes, they have. Let me take you back to the year 2010. There was a standoff between China and Japan. A Chinese fishing boat crashed with Japanese warships. It happened near the Senkaku Islands. These are claimed by both Japan and China. This is where the clash happened. Now, Beijing responded by cutting off rare earth minerals to Japan, and Tokyo was spooked. In 2010, around 90% of their rare minerals came from China. So what did Japan do? They launched a $1 billion plan. They expanded their supply chain, and today the dependence has come down from 90% to 60%. So the moral of the story is clear. If you invest money and time, you can reduce dependence on China. Maybe not completely, definitely not immediately, but you can make a dent. Which brings us back to India. How is New Delhi reducing dependence on China? First of all, by boosting local manufacturing. India offers production-linked incentives to investors like tax cuts and subsidies, and this scheme covers around 14 sectors. $26 billion have been allocated for this scheme, and it's slowly working. By November last year, the scheme brought around 1 lakh crore rupees in investments. It also created almost 700,000 jobs. But like I said, it will take time. The second strategy is punitive action. India has levied 46 anti-dumping duties in the last 3 years. 60% of them targeted Chinese goods. The key is to build on that. Because unlike the US or Europe, India's stakes are higher. We share a very long border with China. We also can't friendshore because here India is the friendly shore. So I guess New Delhi will have to strike a balance. Our population needs cheap Chinese goods, but strategy requires de-risking.
Firstpost reports from the world's second largest continent. Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. South Africa goes to the polls on the 29th of May. I will track the election and bring you ground reports. Is it the end of the road for the African National Congress? And will former President Jacob Zuma stage a dramatic comeback? From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global south. Join me every weekday live on Firstpost.